The housing market essentially has flattened out right now. I can see that in my monthly survey of real estate agents. I can also see that in some data I've got out just this week with a survey I do of mortgage advisors. Essentially, things have really settled down. Well, hello again everybody, and welcome to my final comments on the New Zealand housing market and interest rates for 2021. It's certainly been an interesting year with regard to the surprise March 23 tax announcement from the government, which really took a lot of investors out of the market, and they've stayed out of the market since then. And if they've still been looking to make a purchase, increasingly they've been looking at new builds. So that's been contributing to the soaring number of consents for new dwellings to be built around the country, and I guess just also exacerbating some of the problems being faced by builders with shortages of materials getting worse and worse here and overseas, and of course some pretty dire shortages of labour, something I think that's going to get even worse next year when I expect to see a lot of Kiwis basically hop across to Australia. Their economy is strong, labour demand is absolutely massive, you can earn a heck of a lot there than you can here, the house prices are cheaper, cost of living is lower. So I think one of the interesting dynamics for the year we've got coming ahead is going to be some net migration losses for New Zealand, and you need to be aware that there are many people out there who judge the housing market strength on the basis of what maybe is happening with the migration flows. So that's going to be one of the factors contributing to the flattening of the New Zealand housing market. Now, for the past few months, I've been talking in terms of, well, this is the end game for the boom in house prices over an extended period of time, and my best guess has been maybe towards the middle of next year we've got that overall flattening. Well, I would suggest basically that is in place right now. We have had a big pullback of some more investor buyers from the market, but especially of first home buyers, and this is in response not just to the sharp increase in the fixed mortgage rates over the past 6 or 7 months, the fastest speed of increase in those borrowing costs that we've seen since the early 1990s. It's also because of the credit crunch which is underway, something which I'm sure you've been hearing quite a lot of deepening commentary about out there in the media. And it is the Credit Contracts and Consumer Finance Act, meaning that banks are now counting as permanent expenses a lot of discretionary spending, which maybe if you're looking to do some extra borrowing, you could quite easily not do, but you're probably going to have to change your spending patterns for 3 months and then go to a bank with the bank statement showing you're not spending $400 a month on Steinlagers or whatever down at the pub before they will actually believe you. There are some pretty hefty personal fines for the directors of lending institutions if they get their criteria wrong for the lending they do going forward. We've also, of course, got the tightening up on the low deposit lending, the LVRs there, and at the same time, just as luck would have it, we've got banks experimenting with DTIs, debt to income ratios, getting themselves ready for when that regime comes in, probably from next year. The housing market essentially has flattened out right now. I can see that in my monthly survey of real estate agents. I can also see that in some data I've got out just this week with a survey I do of mortgage advisors. Essentially, things have really settled down. For first home buyers, this is actually good news. Prices growth coming to a stop in most parts of the country. Some parts, maybe some little falls are going to happen there, but just remember what I have been emphasising, with a strong labour market in New Zealand, that is a huge degree of support that runs through there. Probably the best news maybe is going to be listing numbers are going to go up. When vendors no longer expect to get an absolutely ridiculously high price for a property, they will capitulate, the sale will go through, vendors will no longer hold out for further increases. So that's the good news. So, I certainly don't see the housing market as having an especially, let's say, tough time next year in terms of, big falls in prices or anything like that. But there will be challenges for people getting credit compared with what has been been the case since deregulation in 1984, 1985, and also just keep an eye on the house building sector. A lot of maybe over-optimistic people could have set themselves up as developers, and there could be a little bit of weeding out in that sector over the next couple of years. Look, everybody have yourselves a good Christmas out there, hopefully a good new year. My personal feeling is get as much sort of travelling around and good times in as humanly possible before Omicron is going to make it into New Zealand, and we see what that is going to bring. So all the best for summer, and I'll speak again in a few weeks. All the best.